Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. I want to give you my top 4 investing strategies, especially for beginners, and some that are pretty easy to implement, but let you know that you have more than one way to building wealth. There's never one way to really anything in the financial space, but I'm going to give you 4 interesting ways to look at it. I'm also going to give you a whiteboard component to this video and really show you how each of these 4 ways can actually lead you to the exact same answer depending on what type of investor you are, what's your risk tolerance, what do you feel comfortable doing. So let's go through the top 4. I've got some notes here just to make sure I hit them all and give you all 4 instead of just 3 or miscount or what have you. So the first one's got buy and hold. This is super simple, made famous by Warren Buffett. I also say that some of these strategies can actually stack on top of each other too. So it doesn't just have to be one or nothing. It can be 2, sometimes it can be 3, and you can again stack or layer these however way you want to. All right, so buy and hold, again, Warren Buffett, very famous for this. You buy it, you hold it, that's it. Now really buying and holding is really best suited in my view for 1 year and longer. That's where you're going to see the biggest benefit. For example, I don't think Amazon has done that well in 2021. However, if you bought and held Amazon, it was $1,500 a share 5 or 6 years ago, you'd be sitting real pretty right now. Same thing with Tesla, same thing with almost any stock out there, which is the cool thing because the stock market tends to go up. Another great example of this was in 2020. If you bought in January and left things alone, the market would have fell 38% or whatever it did back in May, and I keep saying May, but March and April, you actually would have ended up with like 15 or 17% gains because you did nothing. You bought, you held, you left things alone. You didn't panic. That's what buy and hold investors do. The longer you buy and hold, usually the better off you are. So that's buying and holding. Next one is dollar cost averaging. This is one you can layer on top of most of these strategies here. Dollar cost averaging, you're putting in the exact same amount on a regular basis. What's the regular basis, you say? Usually 2 weeks or 1 month. That's it. Either every month, first of the month, you put money in, the same amount of money, or every 2 weeks, just like you would in your 401k, you're taking money out, you're investing in the market, and that's just how it goes. Now, I do it weekly. I do it weekly for a few reasons. Number 1, I like it. Number 2, it encourages others to learn more about investing because I'm usually doing this on public, and I like doing it. I don't think you need to do it daily. You don't have to do it weekly either. But again, I do it to encourage people and to get myself into the habit. If I were to do it every 2 weeks, I really don't think there's going to be that big of a difference in terms of my returns. That's going to be, what stocks I'm investing in and which ones I'm not. All right, so that was dollar cost averaging. The next one, swing trading or momentum trading or momentum investing. A bunch of different ways to describe this one. Basically, and we'll go through this on chart. This is kind of, taking advantage of those ways, figuring out this is the dip I'm going to buy, and this is exactly where I'm going to sell. Most people, that's probably the biggest questions that most people ask me is, well, I bought this and it went up, when should I sell? When should I get out of this? Why? And how do I figure out at what point do I sell? Well, those who are swing traders have very precise measurements on when they should get in and when they should get out. And they can say, for example, we'll talk about Boeing here in a second, that $209 a share just seems to be the magic price number. Now, is it accurate? We'll find out, right? You got to ask a swing trader that and see if that trade worked or didn't. But they use very precise measurements again to say, this is when I'm getting in and this is when I'm getting out. A buy and hold investor, they don't care. They're getting in when they're getting in, and they're going to get out in several years. It's not going to really matter to them. If you told me, right, 4, 5, 6 years ago, should I get Amazon at $1,500 or should I get it at $1,450? It don't matter now. It's $300. It's $3,000 plus a share. Who cares, right? So over time, it may not matter to a buy and hold investor because they got it for really cheap years ago. Whereas a swing trader, you're trying to make money in the margins, and it really matters at what price you get in and what price you get out. All different approaches. All right, and then the last one we got here is value investing. Value investing really can be layered on top of buy and hold or DCA, but basically what that is saying, look, the stock is good, or actually the company is good. I'll say that. The company is good, but the stock is really falling apart. The stock is really falling off. I think as a value investor, this is good for me. I think it is a value. So I'm going to get it, I'm going to buy it and hold it for the long term because I think it has value. Great example, this is PayPal. We talked about it. Everything seems fine for PayPal. They're making money, they're growing, they've got partnerships, they got a new partnership with Amazon. Why is it down 25% again? Right? So a value investor can say, look, I think that this is a value at $200 a share, whatever the share price is for PayPal now, and I'm going to hold it. I'm going to buy and hold. 2 years from now, 3 years from now, 4 years from now, I would have been what we hope to be the savvy investor that got in at 200 and now the stock is at like 1,000. And that is not a prediction for me of where PayPal is going to be, but I do hope and think that it is a value. I'm not here to tell you it's going to be at whatever price number. I don't know. Catch me in 5 years and we'll see. All right, so let's go ahead and go to the whiteboard real quick and then kind of layer these on top of each other and hopefully give you a better illustration. All right, let's hit the whiteboard. Here is a chart of Boeing. You can see that in the top left-hand corner, and we're going to illustrate all 4 of those strategies looking at one company, which again I think is a really interesting way to look at it, because every investor has their own approach. They're going to use their own strategy and invest in their the best way possible. But I want to show you how we can all look at one company and have different approaches and different profits and different levels at which point we're going to buy and sell and do these different things, which makes investing, again, makes it fun. It makes it frustrating for some, but let's go ahead and look into it. So start off with a buy and hold investor. I'm just going to start at the left-hand side, which would be about November 2020. So if I was a buy and hold investor, I would have bought somewhere in this space. Let's just say that's just the day I did it, and I would have just held. And for an entire year, I wouldn't have made that much money. In fact, I actually would have lost money. If I put in $1,200, I would have about $760 or so today. Now that actually counts, to be exact, that actually counts in October-ish, like end of October. The program I used counts full months, so that means that November's not over, so I don't have November's data yet. But basically, if I put everything in, let's say I was going to invest $100 a month, but instead I put all my money in on November, whatever day that is, held through the end of October, I have $760. If I had it, held it till now, I may have done better or worse. But that's it. That's buying and holding, right? Now that's going to be a difference between when you do it. Let's say if you bought down here and you held it, you actually would have made a little bit of money. But again, that's buying and holding. Now, this is only 1 year. You can see here at the bottom. Now, if I go to 5 years or 3 years or even 2 years, this might look a bit different and might be more profitable for buying and holding. Now, if you ask me, I think buying and holding is the best strategy for long term. So I'm really not going to be in here and trying to do all these fancy things if I'm buying and holding. I'm going to pick a time, I'm going to buy it, I'm going to hold it, I'm going to just leave it alone. I'm not going to be too particular about the time, because whether I am buying here or even way up here, after 3 years, after 5 years, it's not going to matter. Right? In theory, right? That's not always the case, depending on what company we're looking at. But you would want and you would think that, if I'm buying this at $270 a share, which is right around where it was at that point in time, then 5 years from now, it'll be at 1,000 or something like that, which is what you would hope. Again, that's not a prediction for Boeing by any stretch of the imagination. That's just an example. You can go back 5 years and see where Tesla was, see where Amazon was, and it completely changes your mindset about what's high and what's low. But again, that's what a buy and hold investor would do. They will come in here and buy and just hold and hold and hold, and hopefully a year from now, 2 years from now, 3 years from now, it is much higher than what it is today. That is the point, right? So that is how buy and hold works. Let's move and do dollar cost averaging next. So in dollar cost average situation, people ask me this all the time. How do you do it? What does it mean? What are the benefits? So in this case, let's just say that every month I would put in just $100. And I'm just mark these places. So that's December 2020. Then we've got January. Then we've got February, March. And we're just going to kind of make some hash marks here. June would have been pretty high. September, October, November, and then, December's not here yet, so we'll leave that alone. So in this case, I still invest $1,200, right? This is the same $1,200 that I could have just put all here currently, or not currently, but in November 2020. What if I took it and spread it out? Well, in this case, I actually would have had close to $2,300 and made more money than buying and holding. Buy and hold would have gotten me, again, about $760, and that's from November 2020. January 2020. From January 2020 all the way to October, the end of October of 2021. That's just a program I use. It picks January to the end of the most recent month, and that's what you would have had. So you actually would have ended up better off using buy and hold. Using dollar cost averaging. Now you can do these, you can technically layer these. I can dollar cost average for the long term and just continue to hold the stock. But the advantage here is we talk about buying low and selling high. Well, I'm getting all these at a very low price, right? I'm getting some of these at a low to medium price. Therefore, my shares are averaged out. And when I go back and calculate my profit, the shares I got here are the most profitable, right? Because I'm getting them at less than 200, and they would have made whatever money they would have made. So as I'm calculating all this, really your app does all the calculations. You don't have to do it, thankfully, but you actually end up better off in this particular scenario. With this stock, you would have ended up better off. That's not always the case, but again, I don't have to guess and think, well, is this too much for me to pay for it? Is this the time for me to buy it? Is this the time? All these things are taken out of your hands. You don't have to worry about, because you are dollar cost averaging. You're going to buy $100 or whatever that amount is going to be on a regular basis. It can smooth out a lot of your investing process. And again, it's going to, if this was the perfect price, looking back, right, which you didn't know at the time, but looking back, this was the absolute perfect time to have bought, and this was the absolute perfect time to sell. None of us knew this. None of us knew this at that point in time. So I get to skip it and just say, I'm just going to invest every month. I'm going to invest in February. And by default, right, I'm going to hit some of the best prices in either case. Okay, so that's one way, or the second way, through dollar cost averaging. Next, we'll go over momentum or swing trading. They kind of fit in the same category for me. Basically, what they will do, what a momentum trader will do, what a swing trader would do, they're going to come in and analyze this chart. And they've got a bunch of different things that, moving averages and all types of fancy things that you can find here in the technicals category. They can overlay on this chart. I'm not going to do that today. This is not a swing trading video, but we do have one. This is just for illustration purposes. So you can see here, this is a very pronounced wave, right? That we can see that. And what we see here is there are certain places, right? If you could predict where this was going, or if you could just choose, you would buy here and sell here, right? You would buy here and sell here. You would buy here and sell here. You would buy here and sell here. You would definitely bought here and sold here, obviously, right? So what do you notice from that? And maybe we would buy here, maybe we sell here too, right? This kind of helps you to figure out where to buy and sell if you want to be a swing trader. Well, what we notice quickly is right every time it hits right about $209, that seems to be a good zone to be buying in, right? It just seems that way. Right around every time it hits 209, hits at 209. Takes off. Hits 209, takes off. Hits 209, takes off. Oh, look at where it is right now, right at 209. So one would assume that it would take off after that. Now, I'm not telling you that it will. I'm looking at Boeing for the first time like y'all are. I just really picked it out the air. I don't hold shares of Boeing. I don't intend on holding shares of Boeing or trading Boeing. I'm just, again, showing you what I'm looking at. And again, this is not a technical analysis, just an example. So that's what swing traders try and do, is find those entry points, decide at what point they're going to buy, at what point they're going to sell based on what this chart is doing. I could also say, when we talk about what price should I buy? When should I sell? I experienced a huge gain. Should I get out of it now? If you're a swing trader, you have that answer because you can kind of look here and almost connect the dots and say, well, every time it gets to this line, that's when I should sell. And if I get in at 209, maybe that line is going to be, if I extend this, maybe I'm getting out at $220 a share. Maybe, right? Depends on what settings you have on your chart and all that kind of stuff. That's what a swing trader is going to do. So that's how that works. Pretty quick and easy and simple in illustration. Now in practice, there are a lot of things that are a little more advanced. We just talked about this in the Investors Toolkit. I'll put that link in the description. All right, so that's another way that you could do it. So that's swing trading. We talked about dollar cost averaging. We talked about buying and holding. Now we'll go into the next one, which is value investing. Value investors aren't actually looking at charts that much at all. However, what a value investor may do is say, look, I've looked at how much money Boeing made. I see that the economy is doing this, this, and this. And I see that the price has fallen from $230 to $209. I think that this is not accurate. I think that the company is worth a whole lot more than what it is. Maybe I think that it is worth $270. Right? And that in a year and 6 months, maybe it, or whatever time frame, that it can go back to that price range based on what I see in the company. So I'm looking at how much money are they making? Is the company growing? And even though, because most people panic, right? You go from $230 a share all the way down to $209. A lot of people panic and sell and act a fool, right? A value investor will say, look, well, I think I've done my research. I saw how much money the company made. I'm going to go ahead and buy here. I do not care that the world doesn't like this company right now. I think it makes sense. I've done my research. I see the statements. I look at the PE ratio, whatever, things I want to look at. I'm going to go ahead and buy. So that is what a value investor will do. Another great example of this is PayPal. Again, I've said that before. A value investor say, look, this stock is really beat up. I still think it's a good value. Also, a value investor can look at it this way and say, it was at 270 and this is already really low. From 270 all the way to 209, I think the company is still growing. I think the company still has value, right? Or whatever it is. I'm going to go ahead and buy here because I believe in the company. And maybe next year, it'll come back to that 270 area and I'll sell then and make my profit. That's how a value investor will look at it. Now, again, we can all figure out different ways of looking at this company based on the exact same information that we have here for the most part. Swing trader can say buy here. Someone who's dollar cost averaging, if this is just your day to dollar cost average, you might also say, all right, well, today is Friday in November, it's Black Friday, whatever. I'm going to go ahead and buy here. A value investor can say, I like the stock. I see what's going on. I'm going to buy here. So you can all say that this is the right place for you to be or this is the right company, but look at it in different ways and have different exit points. Whereas a value investor can say, look, I think it's worth 270. I'm just going to wait until then. A swing trader could say, I'm just going to wait, until it hits this level. A buy and hold investor say, I'm going to wait until 1 year or 5 years. Definitely depends. And then someone who's dollar cost averaging, they're going to dollar cost average for however long they choose. So those are my top 4 strategies. Definitely the ones I see most people use. There are way more advanced ones that are out there, but these are some of the basics. Choose which ones work for you. I started off as a buy and hold investor only. Then I moved more into swing trading. I was always doing dollar cost averaging, but I've kind of moved more towards swing trading a little bit. And I really have probably about 60-40, 60% buy and hold DCA with a little bit in swing trading and trying to take advantage of when I can see these movements when and if they present themselves. So that's how it works. Hope that helped. Let me know what you think in the comments. And that's it. I'll talk to you later.